Hello, everybody. This is John Blank, Chief Equity Strategist of Zacks Investment Research, and today we're going to go through the top 20 industrial ETFs. This is a fascinating subject. You're going to learn a lot today about specific, precise decisions that you can make to improve your performance if you're going to play the industrial ETFs or the industrial stocks. So, first of all, let's get through the disclosures. These are the views of John Blank, PhD. They are not necessarily the views of Zacks Investment Research. Past performance is no guarantee of future results. So like I said, we're going to go through the analysis that Zacks has done, my team has done, and myself I've done about the 20 top industrial sector ETFs. We're going to go through these 20 ETFs very closely and carefully, and then we're going to get through the profitability analysis of the top stocks, because there's actually ways to play this sector straight from the stocks itself. Finally, I'll finish up with two quick slides on the valuation analysis of these top stocks in the top 20 industrial ETFs, just to show you where the fundamentals are versus the valuations in this sector. All right, so the top 20 industrial sector ETFs. Let's get through this. This is fascinating stuff. All right, first off, I want to point out this is the assets under management. There's the expense ratio. There's the inception date. This is the index track. Notice that across the 20 industrial sector ETFs, there is actually 20 different indexes that are tracked. So this is really the story of this industry, is that if you say track the industrial sector ETF, probably what you mean is XLI and VIS. Those are the broad industrial select sector spiders and the Vanguard industrials. They have the lowest expense rate at 0.1, and they have the most assets under management. They've been around 20, 25 years. S&P uses their own industrial select sector, and the Vanguard actually uses the MSCI. So keep this in mind. ITA and a lot of these are subsectors: aerospace and defense, jets, and so on, transportation. There's a lot of different plays here. You can have the equal weight industrials. Also, point out the 1% direction bull shares or 3 times bull shares. These are, your leveraged plays. Actually, they seem to be working pretty well for this particular one because they do have a large cap exposure, and there are times when this does work. I want to point out, in particular, this First Trust RBA American Industrial Renaissance. This one is put out by the Richard Bernstein Advisors American Industrial Renaissance. This is going to turn out to be a fascinating one, even though you're paying 0.7% of assets, and even though there's only 260 million in it, and even though it's been around 8 or 10 years, this may well be the best constructed one from a stock picking portfolio perspective. All right, so the top 24, let's get through them. Like I said, XLI and VIS over here those are your big name marquee ones. I just want to point out that 11% annual returns over the last 6 years is basically what they delivered. So when we're talking about outperformance, we're basically talking about maybe 1% a year. In bad years, they can do 7%. In good years, they can do 22%. I would point out here, ITA, this is the aerospace bounce back. You're going to see a lot of the COVID stories around this aerospace bounce back. And XAR, again, this is another one of those aerospace bounce backs. So keep in mind, PPA and XAR are aerospace and defense, which should be a subsector of these broader industrials. AIRR, like I pointed out, is going to give you that 15% annual growth, 9% at the low end, 28% at the high end. This is a very interesting one to keep on your radar screen and learn more about, and we will go through it. To show you how strong it is over the 7 years here for 170% returns, it actually beats the XXX UXI direction daily transport bull. Fascinating story, AIRR. All right, so here we go. I just want to point out XLI and VIS get 1 and 2 ranks over the last 6-7 years. We like this sector here at Zacks. We gave it a lot of top rankings. AIRR has not been ranked very well all the way back pre-COVID because we just haven't liked the small and mid-cap names broadly. That actually probably is something of a weakness here, because it's going to turn out that AIRR really is and has done well. It's a good example where we can look, the devil is in the details. This is certainly the case with this industry. All right, here is the names of AIRR. Generally speaking, from 2 to 5% portfolio weights, here are the tickers. These names, some of them I know, and you will know well with Zacks if you've traded with us for a while. MasTec, MCore, and Quanta are names that are probably going to jump out at you as names you have already known. But by the way, that's 3 of 25 names. There are a lot of names here in industrial space, the industrial renaissance space, that Richard Burns has selected for you. I really like this information. Get these slides from us and go through AIRR. All right, so this is the price earnings ratio charts for the top industrial ETFs over the last 4 years. XLI and VIS I showed you here is VIS, that's the Vanguard group, and there is your lighter blue line is XLI. I want to point out that basically you can see that VIS has a little bit higher PE ratio than XLI. It also has a little bit lower portfolio concentration. So by and large, this is just portfolio construction differences that are being played out through the PE. XAR, we talked about this. This was the COVID experience. Now that's basically over. I don't think you should pay attention to this. We all know what happened here. Airlines were shut down, aerospace and defense paid for it, and now they're right back at that 20 PE. AIRR, interestingly enough, I want to point this out. You can see that its PE ratio has stayed pretty constant at 15, even though it has delivered 15% returns growth. This means it really is a pass-through to the fundamentals. AIRR, we talked about this. PSCI, fascinatingly enough, is the small cap industrials. They got traded up when the vaccine delivery happened and people started to move around, but they've now way down. So people have gone from elation over the COVID thing to now worry about recessions. So PSCI and AIRR are actually trading quite differently. This is a mid cap. This is a small cap. I have made this case to a lot of you in some of my writings that there is a difference and there's less volatility in these mid cap names. Okay, XAR, I talked about this aerospace and defense. I just want to point out what the chart looks like itself. There's the shutdown, got to new highs after the vaccine initiative, and it has been stagnating around since then. Here is the big move up. We all know that stocks have moved up generally, and certainly this industry has come along with the S&P. And see, we're back basically at this range. It doesn't say much other than the 2020, it's trading at the 2020 highs. Keep that in mind about the overall picture of this industry from a stock pricing perspective. All right, price to book value. Fascinating here. Notice that the ETFs in the large cap space are around 4. Here's 4 again. Here's broader dispersion, but it's basically 4. And then down here, the small caps are down in the 2s. And AIRR, of course, is down in the 2s on a price to book value. So again, if you're looking at the small and mid cap names, you're getting a much lower valuation, half of that versus the large cap names. This is really worth keeping in mind. Again, we're looking at XLI and VIS, and again, you're seeing that in this case, VIS is actually better valued and has more portfolio weights than XLI. So in some evaluation perspective, I think this is probably the right thing to say that valuation and value stocks are a little more playing a role in the Vanguard versus the Spider. This is great stuff. Again, here's your PSCI, the vaccine initiative. Now we're back down to these lows that we've seen before from the valuation perspective. AIR, again, quite stable. All right, percentage change. I just want to point out, really, because this is only 260 million and you get percentage change that can move that a lot, that these things can only be pointed out here and PSCI here. Those are the vaccine stories that you can relate to. VIS and XLI, you can point out that VIS moves a lot more than XLI. Again, I think this is basically an assets under management difference. You got to remember XLI has a lot more assets. VIS is a lot less. So less assets means this one gets moved around a lot. I want to point out that people were buying this stuff at the bottom. And that was really the play. The last play was just at the vaccine initiative. Now they're actually selling it. Keep that in mind. All right, profitability analysis, the top stocks in these industrial ETFs. This is fascinating stuff. Let's get through it. XLI, again, 40% portfolio weights for the top 10 only, so averaging 4%. VIS averaging less, around 3%. More stocks in the Vanguard one, less stocks in the Spider one. Keep that in mind. Now, if you get into ITA and jets, this, of course, is just the airlines. There you're getting a portfolio weight of 60% of the top 10. So there's 6% weighting. You can see 3 or 4 of these are 10 or 11, 12%. Over here, you've got the actual aerospace and defense companies, Howmet, Lockheed, Boeing, Raytheon, things like this. And again, 74% portfolio weight. So again, when you get into these sectors, subsectors, the portfolio weightings go up. Keep that in mind. Now down here, we've got the AUM. I want to point out here that it's the industrials at 22 billion, aerospace and defense at 8 billion. That is the lion's share of what we need to care about. All the rest here is basically peanuts across the board. There really is no other story here than these two breakouts. All right, again, I found this to be interesting. IYJ, which was supposed to be an industrial play here. Visa, MasterCard, and Accenture got put in here. I guess the pass-through is just that they track transactions, but again, this is a mission creep. I don't think this is industrial ETF stuff. You can see the difference between it and all these other names. These are the classic CAT, Honeywell, UP, CSX. These are industrial names. This down here are, but those are not. AUMs, again, really interesting stuff there at the bottom. Don't mistake it. State Street, obviously, much bigger. BlackRock, actually, because of their iShares, have a lot of different ones that get scattered across a lot more names. And Vanguard is actually fourth or third. Interesting thing to think about here. Again, First Trust at 2 billion. Interesting to note that they are almost the size of Invesco in this space. All right, price performance. I want to point out Axon Enterprise. That's this one. Okay, again, this is a stock, not an ETF. And it has exploded. Starting in 2017 to 2023, stock's got nothing but up. You get obviously very volatile now. This is the taser business. It's kind of an unwelcome story here to realize that a lot of volatility, the riots, the policing issues have created a growth stock. But it has, I want to point it out. Again, should we keep Axon in the industrials? Probably not. Here again, it's just in there because it's in there. Now look at this. You've got Boeing. Again, this is the COVID shutdown thing. You're going to see the same out of that as we do here with HXL. This is Hexcel, which is also industrial aerospace stuff. So again, when you get these big drop downs, assume that's the COVID pandemic. Nice charts here are like the Honeywell one, where you get a nice price performance that relatively improves. GE is what you don't want. That stock got hammered. We're going to point out earnings per unit of that stock are terrible. All right, revenue performance. Here again, HXL, I've singled out. This is what I'm talking about. Revenue performance has really come down a lot. And I want to point out in 2022, things rose, and then now they've come down a little bit in terms of revenue growth. So that's the Fed effect right here. Right here, you can see that Fed effect. Over here, UPS, the strong stock, it keeps on doing what it's supposed to be doing. Give UPS its credit. We're still in a business where UPS is helping these industrial names. Net margins, I just want to point out that the net margins of these look relatively static. This is relative to the industrial products group. So this is when you have better performance, like UPS is better to its industrial products group. We're doing this on a relative basis. So this is very helpful to keep in mind. All right, the earnings. Again, here I've got UPS, and this is another great story here, Deere, the industrial agriculture name of choice, and it's just killing it on earnings. So both UPS and Deere are worth highlighting. Here is the story of Hexcel. You can see how these aerospace names they're coming back, but they're nowhere near what they used to be relative to what they had been. So keep in mind, we're looking for relative outperformance here. We've got basically UPS and Deere as our main candidates. Free cash flow. Again, Illinois Toolworks, this green line, I'm going to highlight it. ITW. Fascinating story here, based in Glenview. Why is it doing so well from a free cash flow to equity? It's basically because they're in the supply shortage business, the test, measure, and electronics, and they're in the auto OEM business, which is also supply constrained. Their top two segments are really benefiting from this environment, even post-COVID. So keep in mind, ITW, excellent stock, coming in through loud and clear. Earnings yield. Again, we're going to not play a big role here. I just want to point out we've got different stories. This is the relative story. So again, we want relative performers that are stronger. Once again, UPS is right here. CAT and UNP are over here. Those are three names. You can always play this space if you just don't want to pay the AUM expense ratios and you do not want to have stocks that you don't even understand. All right, earnings pureness. I just want to point out what you don't want, which is GE. Terrible stock from appearance protect. A lot of things going on with GE. You want to stay away from it. Also, NOC. And again, here we get stuff that's basically moving together. So I would think this is really not telling you much. When the things are really breaking out big time from the group, that's where you need to worry. All right, valuation analysis of the top stocks. Number one, I want to highlight Union Pacific. Here's this price consensus and surprise chart. You can see for one that 2023 earnings came down. That was the Fed move. 2024 earnings are coming up. This is the story of this market. Are we trading 2024, this line, or are we trading 2023? The truth is we're trading both, and we're going to continue to put more weight on this. But you can see that pullback that happened on UNP stock is playing out through the enterprise value to sales valuation. These are identical charts. This is more time. This is less time, but basically the same chart. So again, UNP, kind of an interesting entry point here in this chart going back to 2015. Want to keep that in mind. Here's some more names over here. Here's Deere, again, trading very richly, and Honeywell. We talked about that, trading very richly because they are the ones that people want to own in this space. TE 12-month performance. I just want to point out this is relative performance. So we want, this is a 0.3. You want the relative performers that are holding up consistently. The names I'm going to point out here, CAT doing extremely well, and UNP also flat and doing extremely well. These others tend to move around a lot more with the market, a lot more beta trading going on. These names, probably the names you want to own. If you just want a straightforward big stock name to play the industrials, those are ones I would choose. That's it for me. Thanks for attending. It's John Blank, PhD, Zacks Chief Equity Strategist, and here is how you can get a hold of these slides. You really need them for this kind of detail. This is the way you can get to that final link to the stocks and the ETFs that are going to make an overweight industrial play work for you. Keep that in mind. There's a lot of slippage unless you have the data. And I'm just showing you that we do have the data and we can do this analysis and give you some great advice. 866-794-6065 and strategypo@zackspro.com is our email address. If you want us on the web, www.zackspro.com. Of course, LinkedIn and Twitter. We're also out there. Thanks for listening in, and I hope you enjoyed it. I think we've got a great deal of information here about how to truly make money in the industrial space at this point in time, 2023. Thank you again.